of that number is. However, the takeaway I have is that there does seem to be a real discrepancy between what's happening on Wall Street with the market near these all-time market highs and ultimately what consumers are feeling daily and weekly on Main Street. I think that when I have conversations with folks on a daily and weekly basis, Americans are feeling the pressure in their pocketbook. And it's hard
No
for
shit.
when it's sustained to also lead them to believe that the economy is, in this outstanding, exceptional place, like they might believe if they just looked at, where the S&P 500 is sitting.
Based on your conversations with your clients and what the data looks like now, is there any cause for concern about the consumer?
Sure. Well, I do think that it's reasonable when we see where the consumer debt levels are that, the consumer can only go so far. The truth is, historically, the American consumer has been a very, very reliable entity, right? Very durable. However, at the end of the day, you can only get so much quote unquote blood out of the rock, right? There are only so many dollars that we have as Americans for our expenses. And so ultimately, I think it does come back to the Fed policy. If we look and we zoom out just a little bit, the picture that we've seen with inflation, so much about inflation, I think, over the last several years has dictated Fed policy, where, of course, Jay Powell would much prefer that Fed policy be dictating inflation. And so obviously we can see a big picture about what's causing that. I think much of it is being caused by, after effects from COVID and the pandemic.
I'm very hungry.
In many ways, print and spend policies that had existed that are only starting to change even slightly now. I do say because of that, the consumer has been affected. That's the bottom line.
And then, so you're talking about the Fed and kind of let's extend this out a little bit and look towards the road ahead for the Fed. Inflation has been moving slowly. It's been stubborn, but it's been loosening a little bit when we think about the CPI reading, the PPI reading this week, and the PCE has moved a little bit. We know that that's their preferred measure of inflation.
Sure.
What's your take on kind of the road ahead for the Fed when it comes to inflation?
Great question. Well, ultimately, when we see the numbers that came out this week, as you noted, the CPI and the PPI, it came in even. And I think the truth is Jerome Powell probably had a little bit of a sigh of relief seeing it at even, especially after the spike we saw in the PPI and the CPI last month. And ultimately, of course, the Fed has noted that they plan on looking at interest rate decreases later this year. They're not going to be able to look at that seriously without some movement on the numbers. The underlying analytics are what comes to drive the Fed's decisions, that being the rate of inflation and, of course, the unemployment rate. When we see that inflation numbers start to, come down and certainly teeter around break even, it gives
Dobie wants to hold that gain
cover to be able to lower rates. And that is to say nothing of the political pressure, I think, going into an election season that makes an interest rate decrease reasonably likely as well. When we look at the futures markets, I think the quote-unquote smart money is betting on a rate cut around September. Now, if you're asking my opinion, I don't think it's very likely at this point that we'll get much more than a single rate cut this year, but I think from a probabilistic standpoint, it is reasonably likely.
Yeah, it's so funny that you say that because we had a guest on earlier who he was predicting too when he thought that the Fed should have cut already. I was surprised by that, especially because we know that the Fed, especially Fed Chair Jay Powell, has telegraphed that this is a data-dependent Fed. We continue to watch the numbers on inflation. They have never strayed from, kind of talking about that 2% target. So I think your response about expecting one cut this year, that's kind of becoming more likely the scenario, especially when we think about how we started the year, where all these predictions, where it was, the predictions of 6 to 7 cuts, which, the data just did not support that throughout the year. Obviously, we have the benefit of hindsight now. But how are you advising clients in the context of this continued, even if there is one, maybe two, that feels like a stretch to me, but this higher for longer environment, how are you advising your clients?
Well, look, I think that when you looked at the equity markets over the last 12 months, it's very clear that it's been incredibly volatile, very up and down. And so I kind of think about it through two lenses. One, I really like how my cash is performing right now. At the end of the day, a good money market account's over 5% in yield. That is a safe, reasonable rate of return in my book. And so having enough set aside that's safe, getting that kind of yield, I am reasonably pleased with. Now, if I am looking ahead, and if I'm willing to say I'm okay with a little bit of volatility, I think that equities, of course, are going to perform well because at the end of the day, that weight that Jerome Powell can put on the scale when it comes to interest rate decreases are going to have a significant effect on the value of financial assets. It's just the way that it seems the world works. And so as long as you're willing to suffer some volatility in the meantime, again, we know an election season's coming up. Typically, it's choppy around election years. As long as you're willing to kind of go through that little hell in the hallway, as they say, I think it might be rewarding come, early 2025 and beyond.
All right, great insight. Ted Thatcher of Bright Lake Wealth Management. Thank you, Ted. Have a great weekend.
Thank you.
Got it. Coming up, Options Corner. Tom White joins us to highlight unusual options activity from the day and how investors are looking to trade on recent news. United Airlines, Tesla, and Royal Caribbean in focus for that. Stick around.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Okay.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. Time now for Options Corner, where we analyze unusual options trades seen throughout the day. Let's welcome in Tom White, host of Fast Market here on the Schwab Network. All right, Tom, so there's a name that's trading lower today. Maybe it's rising oil prices this week, United Airlines. You see a neutral to bullish trade that stood out, so tell us about this.
Yeah, all the airlines getting hit today, Diane, and you're trying to look through, to figure out why the airlines are down, right? Consumer sentiment data, a little bit weaker than expected. You mentioned oil prices are up 4% so far this week, above $78 a barrel. That's going to tighten up their margins a little bit. But then you look on the flip side, and some of the commentary that we've heard out of the airlines over the last quarter or so is the fact that, hey, planes are full, international travel is picked up, business travel is starting to pick up. Those are their high margin businesses. And United Airlines, basically beat operating revenue last quarter of nearly 10%. And they narrowed their per share loss down to 15 cents from 63 cents a year earlier. So a lot going right. TSA numbers are back above 2019 levels. So it seems like consumers are being, picky about what they're spending on. But travel and experiences is not one of those. But still, the stock's down 5% today. Still up about 18% so far this year. It did break down through its 50-day simple moving average today. So that might be a little bit of headwind for the stock in the near term anyway. But, we saw somebody in the options market taking advantage of the pullback that you're seeing. And I kind of like talking about this type of strategy that this trader did because it gives you opportunities to the upside while still staying relatively, conservative with your view. So
I'll get my soup ready and come right back.
September monthly cycle, the 46 strike calls, or 46 strike puts, pardon me. They sold 5,000 of these for an average credit of $2.54. So the break even where this trader starts losing money is all the way down to just below $43.50 per share over the next 98 days. That's about 12% below the current share price. So what do I mean by this type of strategy working out well? Well, the stock's pulled back, so implied volatility levels are starting to rise, so option premium is rising. So this trader took advantage of the move today, sold some out of the money puts for that neutral to bullish stance on this one, and there were also call buyers in the July cycle on the 55 strike call also. So a lot of option activity on this pullback here in United Airlines.
All right, so from the skies to the ground, next on your list is Tesla. Obviously, this one has been in major focus today. The stock under some pressure after starting out the day higher, but you see a bullish approach from something that you're watching, Tom?
Yeah, a lot of call activity in here today. Call volume is about 1.5 times normal daily average volume. 1.5 million calls, over 1.5 million calls have traded on the day today. So I think there was a lot of earlier buying when the stock was up about $8 from where it currently is. So it's pulled back from those, given up basically all of yesterday's gains on the back of the shareholder meeting where they overwhelmingly approved the ratification of
I knew they would.
the CEO Performance Award and the re-domestication of the company to Texas. Been a pretty volatile stock on a normal day, but a pretty volatile week for this one also. If you listen to some of the commentary from the analyst side of it, though, Bernstein still hasn't underperformed.
Volatile week.
Wedbush, Dan Ives, and they said this is about a $20-25 overhang off of this company now that they got this pay package through. And then they talked a lot about autonomy and the robo-taxi industry moving forward. That might be big, market moving events and provide a lot more revenue for this company. And what could their valuation be in 5 to 10 years? So there was positives out of this, but it's almost like buy the rumor, sell the news type of event that we're seeing here in Tesla, as you mentioned on my show earlier today. But we did see some call buyers in here in the June 21st monthly cycle. So just a week till expiration on this one. Traders were buying over 60,000 of the 185 strike calls, just out of the money to the upside. They paid an average debit of about $2.70. Those have come down in price as the stocks moved lower. But that break even for these traders over the next week is 187.70 to the upside. That's about 5% above the current share price there in Tesla. And just a lot of call volume in here. Not surprisingly, with expectations that this overhang is gone from the stock and there could be some potential to the upside.
All right, for our next one, I feel like we're kind of in a transport segment, Tom. I mean, we went planes, skipped trains, covered automobiles, but let's head to the seas. Right?
Yeah.
We're seeing some weakness in cruise liners. This caught me off guard because Royal Caribbean has had a lot of love this year, but the stock is getting hit today. You saw bearish activity there?
Yeah, travel industry getting smacked all over the place here today, Diane, and the cruise line's no different. Royal Caribbean, this stock just hit an all-time high on Wednesday afternoon, pulling back about 5% today. Still up pretty solid, about 14% this year. So it's had a good run, and probably based on the fact that their earnings have been spectacular, to say the least. Load rates are about 107% rate at this point, so over the 100% capacity that a lot of these boats have. So demand's there for these. They're booked through the end of 2024 and 2025, according to the CEO, is setting up for their best year yet. So the cruise lines have had a lot of love lately.
Man,
it's
that's
reflected
cheap.
in Royal Caribbean's share price to the upside. They raised guidance last quarter for the full year, and they still left room for some beat and raise quarters moving forward. But the stock's getting hit today. Maybe those crude oil prices rising, but I think the big catalyst for this industry today was a note out of B of A, where they saw some softening pricing in the month
Target.
of June for cruises moving forward. Now that hasn't been
The Donald's at 37.
The
About
basic
hit my
guidelines
support.
have been going on for the last year and a half as far as cruises goes, because they keep raising prices, but demand is still there. So B of A thinks that
Oh,
this
that'd
might
have been a
be,
cute one.
you know, a trend.
Coca-Cola?
Maybe that the pricing is going to start to reverse and starting to soften over
1, 2, 3, 4
basis. So that's some concern, and that's why you're seeing the weakness here in this sector. But we did see a trader come out and say, hey, maybe I agree with this note out of B of A. And it's a bearish risk reversal type of trade that kind of stuck out to me. It was out in the July monthly cycle.
Apple.
35 days to expiration. A trader bought 4,000 of the 140 strike puts in Royal Caribbean, and then they sold 4,000 of the 160 strike calls.
I think we got to wait for
So this is a
110 on
combo
Apple.
trade where they're buying the put, that's bearish, and they're selling it out of the money call to help finance that, and that's neutral to bearish. They paid a debit of about $1.45 for that. So this trader needs this.
I'll tell you what, I had one heck of a day here trying to figure this computer out. We had last night, I woke up, I turned on my computer, all of a sudden I started hearing howling outside, real high pitch howl. If you ever been in a tornado, you know what it sounds like. Now I'm hearing a dog bark. I mean, just, whoo, and I looked outside and I said, oh man, that wind's blowing, no rain. Then I was in there in the kitchen cooking up some spinach omelet with some tomatoes and heard boom, and then the lights went out. I said, oh shit, man, I had my computer on. I just turned it on. So I got one hooked up to a surge unit on the left side and one hooked up to the right on just a regular old, I thought it was a surge one, but I guess it wasn't. So I turned on my computer when I get back from, I knew the electricity wasn't going to be on, so I did some little carpet cleaning. Then came back right about 9:15, I don't know what time it was. Then all of a sudden, I turned my computer on and only had 2 monitors up. I said, oh no, what's going on here? You know, the computer was acting kind of funny. So I got down there and I welded some wires around, turned it back on and off, and then I called my Digital Tigers where I got the computer from. This computer's not cheap. It's like a $2,000 computer. With the upgrades, and I thought I blew it. So my monitors didn't come on at all. And I went and unplugged them and I brought them in the kitchen and plugged them in and they worked. Then I came back in here and they worked here, but they didn't show any graphics. So I got the Digital Tiger back on there and I said, man, it's got to be the monitors. So you can sit there and go through my computer and tell me what's wrong with it on the internet. Shared my computer with him. said, seems like everything's all right. I said, man, I can't get these things going. And he said he'd never heard of 2 monitors going out at the same time. And I told him I had them on 2 different outlets. And we had one heck of a storm last night, lightning storm, with buckets of rain. So I had to hurry and get to a job. I came back, the electricity was still off, so I went and done another job, came back, the electricity was still off, and then went to do another one. Then I come back and I'm panicking and trying to figure out, okay, what have I got to do? Do I got to go out and spend another $2,000 on a computer? Or do I got to go out and buy me one more monitor? Well, now I got 3 up. And I usually have 4. So then I hooked it up and I couldn't get it to work, and I'm going, oh no, it can't be the computer. Then Ocean called me. Thank you very much. I said, I'm at Best Buy. I got to get me another monitor. I've tried everything. Shut it down, rebooted. So today I probably won't trade nothing. Hopefully I can get me another monitor going. Got one. I got a newer, better surge protector this time. Got little green spots in this thing. I don't know what that deal is. Might move my monitors around a little bit here.
Or doing the things that you care about, whether it's gender equity or alternative fuels, investing directly in those companies as opposed to broad ESG investing, which has really tried to be all things to all people.
And so I know you mentioned the statistic about 99% of millennials. I hear that about millennials. I hear that about Gen Z, for instance. And I'll talk about one company. I know we're not going to focus on companies so much, but I think about, for instance, Shein not coming to the public market here. One of the concerns about them has been, you know, kind of their sustainable practices. There's a lot of questions and criticism about that. So it seems like there is an opportunity there. Has ESG become too politicized? Is that the problem?
I do think it's super politicized. I mean, if you look at earnings calls, there are very few CEOs who are using the ESG term. That doesn't mean that sustainability has gone away. There is not a fund manager who would invest assets without looking at the environmental footprint of a company or the governance structure of a company as part of their fundamental analysis. So this is a given that it's here to stay. And by the way, it's not just millennials, it's women as well leading the charge on wanting sustainable investing. And so I don't think that's going away. I don't know that it's going to be called ESG investing per se going forward. And I do think that there's going to be a lot more regulation required to bring the consumer back, the investor back to that ESG investing platform. We're going to have to show, we're going to have to prove that what the companies are saying is actually true.
And then I got to ask you, so there are different companies that have made pledges to reach net zero in terms of like their carbon footprint. Right before we got to you, we were talking about some of the cruise liners. They've made all these pledges as well because they have a lot of challenges in this. Their plan is to move to LNG, for instance, liquefied natural gas, whether we're talking about different types of fuel or even the EV space. Is it about the, what is potentially the catalyst for expansion? Does there need to be kind of more government tax credits or something like that to, kind of fuel a resurgence in ESG?
I do think that there is going to have to be more government intervention, again, because of the inherent conflict between profitability and the cost of sustainability. That's just not going to happen by itself.
Government
so
intervention.
More regulation. And I'm a total capitalist, by the way. I hate saying that, but we're going to have that if we want to see this move forward. Like you say, the net zero pledge has been made by so many companies, but if you actually look at their plans, less than a third of them even have medium range goals to get there. So I find that a lot of companies they're talking the talk, but they're not necessarily walking the walk because it's expensive and it's hard.
Yeah, you're right. I mean, you make a great point about, look, this is America. It's all about capitalism here. Really quickly, any ETFs that are kind of holding their own in this space?
Yeah, well, I would say the Nuveen Large Cap Growth ESG Fund is up 45% in the last 12 months versus the Russell 1000, which is up 39%. It's got an expense ratio of 66 bips. If you're going for price, you can look at Transformed 500 ETF, ticker symbol VOTE. That's got an expense ratio of 5 basis points, and it's up 28% in the last 12 months. So I would go for passive ETFs, which are low cost. And what I really like about VOTE is that they actually proxy vote, so you can see an impact. There's no guarantee that any of these funds that you're in are actually doing anything. Are they effective? That's why you're in them. And so the fact that they're voting proxy or that they will provide you an impact report is really important if this is something you care about.
Holly, I loved our conversation today. Holly Muldassar, Stearns Financial Group, thank you so much for joining us today. Thank you for the kind of state of ESG. Have a great weekend, Holly.
Thank you, Diane. Take care.
You got it. Still ahead, we focus on stocks powering the market forward and dive into a few investing strategies as we continue to see markets outperform in general. That's next here on the Schwab Network.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the Watch List. I'm Diane King Hall, coming to you live from the New York Stock Exchange. Let's take a look at the markets with just under 90 minutes left in the trading day. We'll get right to the S&P 500, the broader benchmark of stocks. It's still under some pressure, down 0.2%. Now let's go through all the major averages that are down. Dow still lagging, down 112 points, so down nearly 0.3% there. Small caps continue to lag as well, off by more than 1.5% there, down by 1.8%. Nasdaq still just doing a little better than the other major asset classes there. For a market update, I want to bring in Ben Lichtenstein, Senior Futures Contributor. Ben, where do we stand here in the final 90 minutes of trading?
Yeah.
Diane, down on the day, but above 5,400, I think is the best way of summing it up, right? Fractionally lower here in the S&Ps. What a week it was on Wall Street. I mean, you're talking all-time highs, really continuation of the pattern we've been seeing in terms of the bull trend. Fed Chair Jerome Powell, CPI data, earnings. I mean, big tech really kind of grabbing a hold of the reins and charging this one forward. But let's start off here in terms of looking at some of the price activity we've seen as of recent with the week that was. And I wanted to shift from the SPX actually to the futures contract. I have the ES up here because I wanted you to see this move that we saw. That was Wednesday, if you remember, in reaction to the CPI data. Look at this as we moved up and through that 5,400 level and all the way up to a new historic high. That was 54.50. So this is the area that we're going to continue to watch next week. But this chart also, Diane, really spells out those two phases of development that we look for. That sideways consolidation horizontal phase, they're waiting for news or that catalyst. And then again, that CPI data. Here you can see the market just really took it and ran with it. And so we're just forming value at a new higher level. Basically, imbalance gets created from the news and then acceptance of that new historic all-time highs. So taking a step back, just want to show you, as I mentioned, this is really just continuation of the pattern that we have been seeing. 2 steps forward, 1 step back, and well, you can see the trajectory that provides. We're talking bottom left to the upside and bottom left to the top right, well-defined trend to the upside from 41.22 back in October of last year to 54.50. Again, that new all-time high we posted this week. I mean, simply put, Diane, this is exactly what the bulls are looking for, and I've been joking all week saying that you could blindfold me, put a dart in my hand, spin me around 10 times, I would throw that thing and hit something that's bullish. The S&P is this chart behind me, a reflection of that.
Oh, yeah.
It's true. It's true. It's hard to kind of go against what the sentiment has been, and even though the S&P 500 is a little lower, as we know, it's on track to post gains for the week, but we've seen weakness in Bitcoin. Once again, it's lower today. What are you watching there?
Yeah, it has been a little bit of a disappointment considering the strength we've seen in stocks, right? That risk-on tone that the S&Ps, that chart we just looked at, is expressing. The worst week for Bitcoin since April, which kind of has a lot of people scratching their heads, I think, right? We've seen yields come off. We've seen the dollar strengthen a little bit. So maybe a little bit push and pull there, but wanted to just kind of take a similar look at price activity and almost the exact opposite of what we looked at in terms of the rally up in stocks and the S&Ps. Here's Bitcoin futures. And you can see this is top left, bottom right. The highs were selling near the end of last week, 72.6, all the way down to 65,200. Look at this. We're hanging out on the lows as we speak, so no real rejection at this lower level. And then just taking a look here, I want to just kind of step back and look at the bigger picture, you're going to see we're holding near the all-time highs, right? So maybe no real rejection of this level as of yet. We haven't even taken out the lows that we saw back in April, if you remember. So again, on that bigger picture, we're kind of establishing a balance area, value area near the historic levels, but again, just kind of lack of enthusiasm relative to what we saw in terms of stocks. We haven't seen a new all-time high in Bitcoin since end of February, beginning of March. So again, lack of participation, but maybe not all out lost here for the bulls. Again, still forming value at this level here, just around this, well, we'll call it 66,000 level, 65K basically, kind of smack dab in the middle thereof.
All right, that's a level to watch there. Ben Lichtenstein, thank you, Ben. All right, time now to focus on what's powering the markets. Let's welcome in Chris Vermeulen, founder and chief investment officer of Technical Traders. All right, we're seeing some pressure today, kind of in general after that consumer sentiment, but what continues to be a winner, Chris? NVIDIA, once again. Can it do no wrong?
NVIDIA.
Pretty much, as NVIDIA goes, so does the rest of the market, so they say, but there's a lot of interesting things going on. Like when we look at the overall tech weighting in the SP 500 alone, we are right back to 1999, 2000 tech bubble levels. Technology is like 32% of the SP 500 index. And this market has very much so a feel of a tech bubble, of we're in this frothy phase. And when we look at NVIDIA, it just wants to keep going higher. We're infancy stage here really in the AI world. NVIDIA is the leader. And they just did one of the most powerful things you can do for a strong company, and that is do a stock split. A lot of people go and they see $1,300 share. They're like, I can't afford that. I don't want to buy one share. They do a 10-to-1 stock split like they've done. Now it opens up so all kinds of investors can now go buy 1 or 5 shares and feel like they have some impact. So this naturally drives price higher. That's helping us. And we're also seeing Apple. They're getting into the AI space. It's created a feeding frenzy in share price. So we're seeing two of the biggest companies really just muscling their way higher, doing things that investors want to see, and it is really blinding to most investors. They don't realize the markets are actually not that strong. They are tech-driven. As we see today, Russell 2000 down like 1.5% or so. In the grand scheme of things, there's not a lot of stocks are actually muscling their way higher. Most of them are actually struggling when we look compared to the highs from a year and a half ago. So people just don't realize we're really just, it's a very thin market. It's only getting driven up by tech, and we got to be very cautious of what's going on here.
Chris, is that a bad thing? Because, I mean, isn't the future of the world really tech?
It is. I mean, I would say, in base, if you compare technology from back in 2000, it's a very different picture. Technology back then was a bunch of companies that made no money. They didn't know what the internet really was. Now technology, they make the most money. They seem to. They're very powerful. We are in a tech-driven market. So it's just interesting that everybody's piling in. We're just so heavy weighted on technology right now. It's not a bad thing. I mean, it's driving the markets higher. That's what we all want. But there will be a time when there will be a cooling down phase in these markets that are getting pretty frothy. It'll pull the markets down with it. But I mean, it's driving the markets up. That's what investors want, and we might as well ride this trend while it's going, because who knows? It could keep going for a long time. There's no point really trying to pick or time a top.
It's fair, though, that the rug can get pulled out at some point, and we don't know when that will be. And it was interesting to see the action in Apple this week, especially when you think about back to April and, all the challenges it's faced. It's one of those companies you clearly can't count out. So let's talk about a little bit about then just how much runway do you think, for instance, the tech sector has, especially when you say look at QQQ, what does that tell you?
Yeah, I mean, I think technology today, when I look at all the main sectors, technology right now is the only one positive. Everything else is down, which is obviously a very clear sign that money wants to keep moving into the technology space. Now, seasonality-wise, we typically see the stock market top out June or July for the summer, and then it wants to sell off. The chart pattern on the QQQ shows about 4 to 5% upside potential over the next 2 to 6 weeks. So I think there's a little bit more upside left in the overall equities markets. There's a lot of bigger things when we look at economics and what's happening with various commodities and sectors. When we look at the big cycle analysis of the markets, And that is is really interesting and a big warning flag to say, hey, I think we are coming into potentially a very major top this year in equities. And all the signs are there when we look at which assets are leading the way right now and outperforming and coming to life.
All right, and then, so let's talk about, kind of potential headwinds. I mean, the market has been generally bullish this week, still on track to post gains, even with the pressure that we're seeing for, say, the S&P 500, for the NASDAQ. If the rug were to be pulled, and let's say we were, kind of near the end of a bull market, what performs better?
Typically near the end of a stock market cycle, a major bull market that where we've been in, we tend to see gold come to life. We see energy stocks come to life, and we usually see industrial stocks. And what's really interesting, if you were to take those three assets, put them together and chart them as one.
I sold it yesterday.
Compare it to the
had another pop on
weighted
this
S&P
sucker.
500 and the Russell 2000. Which kind of
Oh man, I would have added on right there. I'd have scalped that baby.
We actually have a very similar, almost an identical setup as the 2008, just before we went into the financial crisis. So it's very interesting that these three commodities or these three assets are coming to life.
Yeah, I think I'd have took that.
And holding up very well compared to the broad stock market if you scratch out the tech-heavy side of things and small cap stocks. The Russell 2000 looks terrible. It has a very big topping pattern. Equal weighted stocks are struggling. So this is a very big thing. I mean, we're seeing this in the Russell 2000 that people are dumping shares. They're
I'm tired. Worried.
Pricing. We actually have panic selling right today in the stock market. I have a custom ratio that we follow.
So we had a huge storm last night. One of the jobs that I do, the building that they're renting next door, they had somebody come look at it today. And part of the ceiling fell down. It was vicious. I was trying to drive in it, and I was running in 5 or 6 inches of water in places. Couldn't hardly see in front of me.
Let's stick with the trend. It is up, but the big picture is telling us we are potentially 2-3 months away from a major market top in equities, just based on the cycles in which commodities and assets have come to life and are starting to outperform.
All right, well, pay attention to the cycles. And you're making an excellent point. Russell 2000 certainly not participating, not just today. Chris Vermeulen, founder and chief investment officer of the Technical Traders. Thank you, Chris. Have a great weekend.
Thanks, Diane.
Got it. Still ahead, we bring in our panel to discuss the road ahead for Tesla and how it can bounce back from the weakness the car maker has seen this year. Stick around for that.
And we've got 10 minutes to power hour.
Chief Investment Officer of Sound Income Strategies. We also have Kevin Riley. He's the Managing Director, Exponential Investment Partners. Thank you both for joining us this afternoon. Eric, first of all, I have to say you have just one of the coolest last names that I've ever heard. It seems like timely we'd be talking about money, but in particular, Musk and his pay package. Did what actually occur line up with what you expected to happen?
Yes, absolutely. We expected the package through the voting range, depending on which source, was between 72 and 78%, which was better than the 73 last time. But it doesn't resolve the issue. It just gives the company more of an argument to get it past the Delaware Chancellery judge. She has to either decide to recant on her opinion, or the appellate court has to agree to hear Tesla's appeal, which has been filed. Before that happens, they have the issue of deciding how much the plaintiff's attorney should get paid, and they're asking for $5 to $6 billion. So that'll happen in July. So that's a factor slowing this down. But now they're officially in Texas, which is good.
Finish your thought.
That'll save Tesla and Elon some money. As you recall, their headquarters were already in Austin, but now the official state of Dallas. So.
And then, Kevin, when you think about kind of the conclusion of this, Eric just alluded to this, it doesn't mean everything is done and dusted. There are still challenges that Tesla has to face. But does this essentially a vote of confidence in Elon Musk bode well for Tesla as a company?
Well, I think so, but I think in reality, the shareholders really had no choice here. They were kind of trapped between a rock and a hard place. I mean, you can't let Musk leave, because if he does, the company and somebody else comes in, the company will get valued like a car company, and the share price is going to plummet. On the other hand, he doesn't want to leave either, because he still holds, I believe, 12% of the stock of the company, and he would take a huge personal hit if he does too. So yeah, it is a vote of confidence for him, for the company. It's a turnaround year for the company. They got new products coming out next year and some other announcements coming up. I think the stock may have kind of hit a bottom here, I think.
Okay, Eric, one of the challenges that critics say about Elon Musk is he's pulled in so many different directions, whether it's Tesla, Twitter X, I know it's X now, SpaceX, et cetera, et cetera. Is that something that's still a concern that a lot of attention is being paid to?
It's definitely a factor. The funny thing is that when he pays less attention to Tesla, at least in terms of setting up plants and things, they seem to run better. So it's a valid concern, and it was definitely one of the issues that people cited as a reason to vote for the pay package. But I would say that the fact that you had some major shareholders switch to voting for the pay package, like Vanguard, that were against it beforehand, shows that it's more than just locking in Elon, who obviously has most of his net worth in Tesla stock. It's really a matter of trying to get the company focused on doing what it needs to do, which is introduce new cars, lower its costs, and compete in a market that has more competitors now than it ever has before, especially the Chinese.
Kevin, one of the challenges for the EV space is demand hasn't been what many expected, right? Especially when you have these incentives from the government. But EV adoption hasn't broadened out as much as, industry watchers expected. What could you see happening for Tesla, especially when it goes into, say next year into 2025, that could potentially turn that around? Is there anything?
Well, I mean, for years, people have talked about this whole robo-taxi thing, and that's a possibility. I mean, frankly, it's a bit of a surprise that EV adoption has kind of plateaued here. I don't think many people really expected that. It seems like the market has shifted over to an interest in hybrid cars and whatnot, and there's a lot of different reasons for that, and I think that's a bit unexpected. But, the robo-taxi thing could be interesting. He's talking about robots now for the factories. I don't know if there's any there on that. There's always something. I mean, he has a tendency to miss on these, prognostications and whatnot, but they got to get those new models out next year. And frankly, something I've thought for years that Tesla should do is bring in a real operator, run the company, kind of like Google did with Eric Schmidt, or Chipotle did with Brian Niccol. Somebody who's really good at that particular area of expertise. Not replace Musk, but bring somebody in to help him run the company, because he can't run 5 companies.
It would be interesting to see if that happens. Shares of Tesla right now under pressure off the back of, yesterday the stock was higher off of the expectation, so this may be a little bit of a buy the rumor, sell the news. It'll be interesting to see what the road ahead is. They've overcome one big hurdle for Tesla. We'll see if they can overcome all the hurdles. Eric Byrich, Co-Chief Investment Officer of Sound Income Strategies. Kevin Riley, also joining us on today's panel, Managing Partner of Exponential Investment Partners. Thank you both to us. That's going to do it for the watch list. Download the free Schwab Network app, available in the Apple App Store. And tune in 24/7 on schwabnetwork.com. I'm Diane King Hall. Thank you for watching. We've got Market on Close with Oliver Rennick up next here on Schwab Network.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a window when other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device, for free. Schwab Network.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once a client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
I'm Oliver Rennick. Get ready to cut the cord. Market on Close is coming up. Good afternoon and welcome to Market on Close. I'm Oliver Rennick. It's been a fun week and we might have a little fun last hour here to finish it up as NASDAQ and tech are still backbone of the market, keeping things together while everything else basically falls apart. We've had disappointment this week on how equities have responded to cooling inflation data and a bond market that has not been to blame this time around. So just a little running out of momentum when it comes to anything outside of big tech. Strength today there comes from Netflix, Nvidia, Alphabet, but a pretty limited market with just comm services and tech higher, every other sector down, and a little bit of tone of risk off and a few other places we'll look at when we think about this week. We're of course processing a lot of economic data, some messaging from the Fed, a few earnings too. I'll try to put it together with a few key updates to the way I'm thinking about the cross-asset trends at the end of the show today with the risk radar. And we're talking some specific thematic things, so sector by sector and stock by stock. So let's get into it here. Firstly, you see the dollar still up as bonds are bid. This is a really key development that yields in the dollar have lost the relationship a little bit here, in particular when you look at the 2-year yield ending the week down near the 10-day lows, but the dollar ending it at 10-day highs. It's a really big deal. Generally, it's been pretty reliable to bet that where the dollar goes, yields go, but I have been saying for some time that that relationship should and could break, and it looks like it's happening. And when it would break would be if the dollar generally catches some risk-off, safety-style trade sentiment while yields essentially do the same. And that's kind of where we're at here, as we've had a repricing of bonds around the light inflation data, but also seen a big breakdown in non-tech stocks that seems to be leading into a bit of safety asset buying that includes the dollar when the rest of the world is cutting rates, but we can't. So it's a bit of a relationship shift. Some of these correlations are breaking down, and that's why even when data have been coming in light, we haven't gotten stocks rallying. So that's the key takeaway, the shorthand of it for the week, is that bad data, which we did get this week, a lot of disappointment on data outside of the inflation prints, which were better than expected. Those data did not spur a rally. What we're getting instead is just money getting gobbled up by big tech. It's reliable. Semiconductors continue to be the most reliable part of the market. We saw a little bit of relief in some of the cloud stuff today around Adobe and a bid back into Salesforce, but what's been the most reliable is
Spies had a good day. Choppy.
Outside of that has been a bit of a struggle. We've got deep concentrations.
Little bitty scalps.
And it's what I've described as a single jet engine for the market. It's flowing fine. Indexes and the general benchmarked index equity style ETF investors pretty comfortable with concentration as it's working. But as you've seen, risk appetite in other areas of the risk spectrum fade, notably Bitcoin this week and crypto struggling and once again failing to keep up today with tech. So you really see that we have to be careful on how we define technology. It's got to be productive. It's got to be earnings driven. It's got to be real. And a lot of stuff in crypto ain't. And so when the rubber meets the road here and the market starts to prioritize profits, cash flow, and real growth, suddenly a purely speculative instrument like Bitcoin can't keep up. The fades that we've seen in Bitcoin this week, I think, are really telling about the limits of general risk-taking appetite. We're also seeing the VIX just creep up a little bit. One way to think about it, too, is that the market had gotten quite complacent on generally a matter of things, including the economic trade-off between growth and inflation. And so vol creeps up here at the end of the week with VIX touching 13 at one point today, but it also can't really hold up too high either as we continue to see fades in vol. So the overall VIX tied to the index is going to stay pinned when big tech is doing such powerful work. It's a truly unique market when it's this concentrated and this mathematically skewed towards a few big companies. There's a lot of volatility that does not show up in the VIX, and it becomes a challenging environment for those trying to pick stocks. All right, let's bring in Kevin Hanks, Jenny Horn, as we continue to assess the situation. You know, Kev, thematically this week on the macro front, if I had told you that CPI and PPI were both coming in light, I think you'd probably paint a very different picture than what we see here heading into the weekend.
Yeah, exactly right. I mean, that should have been really good news for the markets. But Jerome Powell kind of squished Wednesday's CPI data when he came out relatively hawkish. If you look, you know, it's interesting. If you look at the week in economic data and in earnings, one stock each day kind of saved the market. It was Tuesday, Oracle, Wednesday, Broadcom, Thursday, Adobe. The data wanted to be good. Jerome Powell kind of stopped Wednesday's data from being good. PPI, remember, I've gone over this a couple times. a lot of energy dominating the weakness in these numbers that maybe people discounted them, the weakness because of why they were weak. But
CRM I was talking about yesterday.
Week for data, right? The jobless claims jumped.
Yeah. No, we missed
Expansion pattern.
Broke down hard. So all things considered, there was not a lot of great data, and even the data we got that we might have liked, we found reasons to punch holes in it.
We didn't get the all clear from the Fed. So.
Yeah, and we wanted Jerome Powell to be that dove,
right.
and he didn't show up for us.
Well, careful with I thought it was a very good display of temperance. You know, like to see that he didn't take the bait to do big victory laps on that data, I thought was finally something that showed real, true kind of commitment to their target and to the idea of much further progress. So to me, that was kind of, a mature thing to do.
And it's interesting, why didn't he go dovish? Well, maybe because we're at all-time highs in the stock market.
Yeah, that's one thing, for sure. So how we balance this, Jenny? I mean, we have a very macro-focused week, but then we also there's all this fun stuff to try and figure out along the the margins, but we can also just kind of blindfold, just buy big tech, and none of this other stuff really matters until that other stuff turns around.
I mean, to speak to that, best performers this week in the S&P 500 are Broadcom's gaining 24% this
Crazy.
week. Skyworks Solutions up 15.7% this week. Qorvo, Adobe, Arista, Oracle, NVIDIA, Supermicro. So those are the best performers. That's the story.
If you had to pick any stocks just to mathematically support the index, those would be the ones. Broadcom, crazy move.
And I also think because a lot of these names that are ancillary winners to Apple's success this week, but now have actually surpassed how Apple did this week. I mean, sure, Apple had a nice 7.7% move this week, but some of its suppliers on not real news actually did even better. So that is actually kind of compelling, along with Supermicro just had this fantastic week, again, on no real news.
Yeah, the thing that's really important that you just touched on, which is very, very important, and it kind of steal my thunder a little bit, because this is my main theme for the risk period this afternoon, is that when you look at the moves in the stocks and tech, the very key difference, sure, thematically, it's still the same AI stuff, but they're moving without commensurate earnings moves. These have been all valuation, speculative-driven moves in the last, really, 2 weeks, which is different than when, a couple months ago, NVIDIA comes out and starts dropping huge earnings bombs on the market and justifies it. The Apple move, pure valuation, speculation, all of its suppliers, pure speculation, even Broadcom. That was a pure valuation move.
I mean, I was looking at ARM Holdings today. It has a market maker move. Why? I mean, there was nothing really that happened in this name other than the fact that, the semiconductor space now the industry is reaching $3 trillion. It's the headline, driving the continued optimism in this name that's now, 15% this week. I mean, I know it's getting added to the NASDAQ 100, but this is a perfect example of a name where it's I'm not even really sure why these names are moving to this extent, but it does make at least trading exciting because you don't need earnings for big tech to move, apparently.
Yeah. All right. So, Kevin, look, when it does get a little bit more kind of disconnected from the fundamentals, and this is looking at forward PEs. I'm going to have a bunch of charts at the end because, they went vertical this week, which had not been the case for much of the first 6 months of this year. Earnings supported. We did kind of get a little distended from that this week.
Yeah. I think it should concern everyone when you look at a chart and you're like, wow, that looks like a meme stock. Oh, wait, that's the NASDAQ index?
That's Broadcom.
That's a 100 stock index that has a chart like a meme stock. I'm not
spit it out, Kevin.
I'm not good at the role of the cynic, right? That's not my role in life. But I've seen too many of these, and they just don't end well.
Right. Look, the chart looks pretty great.
It was even hard for me to say.
Don't try and fade it until it breaks. Basically, why fix it?
But don't buy that first dip.
And I agree with that without even having the expertise. I just can watch. Look at the chart of Supermicro, but then it's well, when do you see the? When do things sort of just top out?
Right.
It's impossible.
Just ask the two most important questions in trading: when and from what level?
Yeah.
Right. Everything's gonna go up and down. When and from what level?
I think basically whenever you get the first major product, physical product from an Apple, or Microsoft, you know, where we've kind of gotten some of these software updates, but like when Microsoft starts shipping computers with Copilot and you see how the sales do, and Apple says, here's the new device, I mean, because the imagination can basically run wild until we actually see if the consumers buy it and if it's worth whatever price they're going to charge, which we don't know yet either. Okay, but look at it. There we go. Microsoft, NVIDIA, Netflix, all higher, but Tesla, with one exception, giving back some of its Elon Pay package gains. Thanks, Jenny Horn. Thanks, Kevin Hanks. All right. Also, the EU is still breathing down Apple's neck. We didn't even talk about that, but when are they not? Let's bring in Zachary Hill, head of portfolio management at Horizon Investments. So, Zach, you know, it really does seem, welcome back. It does kind of seem like when we're trying to analyze the market, you can take one of two routes. One is just the blindfold route, just follow the big tech to the promised land, and then literally like 90% of everything else seems like it's in a little bit of a mess right now with the trade-off between growth and inflation. So what do we do?
Yeah, Oliver, great to be with you this afternoon. And, you know, listening to your conversation before, I mean, it's hard to argue. Look, the market has been very, very narrow, especially over the last 3 or 4 weeks. And that comes on the back of a little bit of broadening out that we saw kind of at the start this quarter. And, you know, the way that we think about it is to have a kind of a reversion trade out of that, you know, mega cap technology into kind of the rest of the market.
There's a heck of a sell-off this morning. I bet you'd freak y'all out.
Or small caps. You really need to see both the company fundamentals and the macro environment be supportive of that. And, you know, nothing
He says
we've seen really over
a narrow run. What is this?
Has changed our general thesis.
That ain't,
you know,
that ain't
last time
narrow.
I said, sorry to tell the same old story, but it really is the same old story. You know, stick with quality and large cap growth in tech in the U.S. until proven otherwise. And so that's generally speaking how we're thinking about things.
The quality basket is indeed filled with a lot of the big tech stocks, given the financial prowess they've demonstrated, many of them pulling the trigger on dividends and payouts over the last couple of quarters. These last 2 weeks, though, distinctly saw a lot of valuation upside as well, which is a little bit of a departure from what we saw in the first quarter. There were periods there when the big stocks
narrow or not.
But the valuation was going sideways because the growth was so incredible. So does that give us some kind of
That's not narrow to me.
You know, the more frothy end of this cycle, if we see the valuation start really, like Apple, pure valuation move this week.
Yeah, I mean, you know, but obviously analysts are updating their expectations as we continue to get new information around their product launches. And so, you know, I do expect that to lag a little bit. It does show up in the valuations first. But I mean, broadly speaking, the way that we're thinking about it, you know, until that macro environment changes, and what I mean by that is either we go into a recession, which is absolutely not our base case at all, or we start to get meaningful Fed cuts because inflation comes down, and Chair Powell, you know, really put the kibosh on that this week. Until or unless one of those two things happen on the macro side, or we start to see, you know, degradation on the earnings front for mega cap technology. You know, we're watching continued growth rates. We need to continue to see those growth rates in revenue and EPS beats, because, you know, when that kind of process stops of that continuous beat and raise aspects that we've seen so far really for the last 18 months, that's where, you know, things start to get a little dicey from the fundamental perspective. But, you know, it's going to be a couple weeks, if not longer, until we start to get another round of earnings, you know, on that theme. So we do think there's a little bit of an air pocket here where the macro is going to kind of, you know, be the main driver.
And if the macro is the main driver, then does that get a little bit more negative if the inflation numbers don't have the momentum that Powell wants to see? It did seem like the FOMC had a distinct opportunity to give the market, kind of throw a bone here to the Doves, and they chose not to. Even Powell said, look, we saw that CPI. We had an opportunity to revise our dot plot, but we chose not to.
Yeah, I mean, you know, we've been doing a lot of slicing and dicing of CPI, not just us, but the entire market, the Fed, you know, over the last couple of years. And generally speaking, that activity has not been terribly useful from a forecasting perspective, mostly because, you know, a lot of it, well, it's just used cars, or it's just auto insurance, or it's just medical care, or what have you. A lot of that relies on these kind of normative relationships, which haven't been very reliable in the COVID period. I think that's just a function of, you know, how extreme this cycle has been. It has not been like a standard recession and recovery type of dynamic. And so, you know, we've been staying away from a lot of those. But, you know, if you look at this CPI print, I mean, it was definitely a good one. core inflation, I think, was the lowest since the fall of 2021. Super core inflation, and again, I don't like to slice and dice, but that was actually negative, for this month. Again, last time we saw that was 2021. But our broad view, after getting burned by the kind of the Q4 pivot last year that the Fed did, and then the reacceleration that we saw in inflation in the first quarter, is
Netflix had a real good day.
Basically off the table. The Fed is just going to continue to kind of sit back and wait. And kind of evaluate as the data comes in. And so we actually, from a macro perspective, think that's broadly supportive for risk markets, because what that's going to do is just suppress volatility and interest rates. And volatility and interest rates has been the main driver of risk, for the last few years. And so that does kind of bias us higher, even though we have seen, some really kind of extreme moves and extreme concentration in equity markets over the last 2 weeks.
Very well said. To the point of the summer months too, the fact that there's no August meeting from the Fed, it seems like that kind of removes some potential liquidity in the timeline, if you will, to frame it that way, because it kind of says, all right, if they can't move next month, which they've said they basically are not going to, then you've got a little bit wider of a gap than normal for an opportunity for them to revise. Do you guys have a strong view on the role of the election, both either proximity to cuts or just kind of market dynamics this year, how that will affect things?
Yeah, I mean, the election's a little bit awkward. The official messaging from the Fed is that it doesn't matter. I believe that mostly, but not 100%. And so, as kind of we're thinking about it, it's really less important of like when the cut happens. I mean, quite frankly, a 25 basis point cut in September is not going to have any economic impact that's going to have any impact on the November elections. So the way that we're thinking about kind of when this Fed easing cycle starts, and I think the important thing is that they're still just talking about an easing cycle, right? We've cut off that part of the distribution where they're talking about hiking interest rates. So the options are keep rates where they are or move them lower. I think that's an important kind of thing to keep in mind as we talk about all this. But broadly, and you heard from Chair Powell, he doesn't want to just cut once. We had just one cut from the ECB a few weeks ago, and they did that because they forecasted they were going to do that, and now we've seen some upside surprises in wage and inflation data in Europe. Now they're in an awkward position and they don't know what to do next. I don't think the Fed really wants to be in that position, and so we do think they're going to be patient, and they want to deliver not just one cut, but a series of cuts. They were kind of pointing, if we take their SEP as gospel, which is a bit of a dangerous thing to do, but that's a decent baseline for their thinking. It was quarterly 25 basis point cuts next year and the year afterwards, until they kind of feel their way to wherever the new neutral rate is. And so, that's how we're broadly thinking about it. The timing of this is less relevant than the fact that we're going to get cuts at some point.
Sure.
And also that, as Powell continues to say, and I think, the reaction function of the Fed over the last 15 years proves out, if the labor market does start to deteriorate meaningfully, they're going to cut quickly to support the growth side of their mandate.
But not looking to do a one and done or have to backtrack. So I really like that point too, because it seemed like the market was trying to apply a sort of European Bank of Canada approach to the Fed here about a week ago, when the dollar was softening up even as they were cutting, and that didn't work out for the dollar bears this week. So I think you described things very well, Zach. Appreciate the conversation. Really good analysis on the macro stuff.
Absolutely. Great to be with you, Oliver.
Appreciate that. Have a great weekend. All right, so not fading the big tech, looking for international participation and shortening duration a little bit, not being afraid to clip coupons. Message from the team at Horizon Investments. All right, let's shift into a little sports talk when we come back. Mavs have got one more chance to make it right and get this finals competitive, but there's a lot of competition in the sports finance world, of course, with TNT now under some pressure and potential major money moves. So we'll dive into it next.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. Schwab.
Have a choice in how you invest with Schwab.
Be part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, on any device for free.
It seems like a long day. You've just been here for a couple hours.
Full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast
I
Market.
really like this Netflix run.
On the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Amazon has upended its streaming ad market,
You can find just about as much in sports
and Netflix is paying the
as anywhere
price.
else in the stock market right now. Warner Bros. Discovery, a chart that's been punished. So
Sure.
Potential for them to lose the NBA. Joining us, Steve Olenek is the chair of the sports entertainment practice at Mintz Levin. Steve, thanks for being here this afternoon. Doing great. Appreciate you joining us as we kind of get out of our intraday market obsession. Tell me about how you guys are thinking about this from your perspective as attorneys. Firstly, kind of what's your interest in this?
Oh, well, it's interesting because it's great because one, it's look at the dollar amounts involved, look at the players, look at sports that solidifies the scarcity value of sports-related properties. These numbers are astronomical. However, if you look at it, all these deals between what the NBA appears to be looking for, it's pretty readily apparent. They're looking for that streaming. Look at the Amazon at $1.8 billion. You're looking at ESPN at increasing to 2.5 or $2.6 billion. NBC Peacock at $2.5 billion with 100 games versus ESPN actually getting less games now to it. So if you look at it in totality, one theme is consistent. The NBA is leaning toward getting a streaming deal.
Is it becoming apparent that for the streaming world, which has obviously become so disaggregated, fragmented, kind of a disaster from a consumer's perspective, and now it seems like financially too, a lot of these companies have struggled, is sports, and it seems like really NBA too particularly, but sports in general kind of the holy grail for them to find profitability?
Yeah, it's interesting. It's a great question. I mean, I think first and foremost, look at the advertising that comes off of sports. You know, look what the NFL did and look what the NBA is trying to do, especially with the streaming deals. If you really look at, they're looking to get those subscribers, project in their financial models to see how they can retain all those consumers and look at profitability. And because, like you said, it's the sports is the holy grail, everyone wants to get in. And in a lot of these deals, from a lawyer standpoint, you have to look at who are the ready, available, and willing buyers in this. And so now you have, look at the NBA, you have multiple people coming into the actual space. For the WBD, now they have to see whether that, from a lawyer's perspective, whether they have that matching right or what they actually did during their negotiation window. Was it exclusive? What is tied to that matching right? What are the variables or kind of strings that are going to potentially be attached to that specific deal, and whether the WBD, as you said, because of the debt, whether they can actually match it. So there's a lot going on. They're very complicated. It's fun, exciting, and as you can see, sports sells.
Does it seem like Warner Bros. Pushed their flexed a little bit too hard and kind of maybe lost the ball here as Obviously, the potential for
Spies
competition
double topped
seemed
into
like it was
close.
understated. They kind of thought that they had the most popular show, that they wouldn't lose this, and now, I mean, does it seem like they're going to be forced to really change their offer, monetarily speaking, to try and keep up with Amazon and the others?
Well, it's not over until it's over, right? So they still have that option where that fourth package potentially get less games. It'll be distributed amongst the other the other three participants with them. Try to get another package. Maybe they'll convert from a local and bring those games into a national package. And then, of course, they'll try to keep that inside the NBA show, which everyone really loves and enjoys. And I think the NBA still wants to have some type of allegiance and affiliation with. So, I mean, do I think it's going to happen? I think it's going to always come down to price, right? Can David Zaslav go into that boardroom and say, hey, we're going to pay this?
Yeah.
And do they actually have that matching right?
Yeah. The Comcast role, too, I mean, kind of a return to form for them in some degree, it seems like, for the upcoming season.
Well, yeah, I mean, it's especially with Comcast, NBC, with Peacock, they want that streaming. They want to see the look in terms of getting back into the NBA, what they once had. Look at what they once did, then they got out of it, now they want to get back in. So, I mean, I think it's great for the NBA, and quite frankly, it's great for sports.
Generally, that means the prices for everything keep going up, right? The bigger the contract deals go, the more the teams are going to pay for the big players. So, do we just see, the whole financial ecosystem of NBA just growing from here? Because it seemed like when there were a few of the potential sales from some of the owners, now like a few of those fell through too. But the whole discussion about like when we had the T-Wolves team owner on, it was basically a conversation about kind of maxing out maybe that, look, perhaps we hit peak valuations. This kind of argues that maybe we haven't yet, that there's still some room to grow.
Oh, I mean, the one thing about sports is it sells. There's definitely some more room. Obviously, with all these sports vanity assets, there's a limited amount of supply on the market, so there's always going to be a demand. And with that demand, I think you're going to get people that want to potentially overpay for the demand.
Yeah, all right. Well, right now it seems like Warner Brothers has been the main loser in it, but not done until it's done. Steve, thanks for the chat. Appreciate it.
Anytime.
Steve Olenek, chair of the sports entertainment practice at Mintz Levin. All right, a lot more money going
One more minute.
We're going to have to be flipping through a bunch of different places to watch the games versus the finals. It seems like that's now the standard going forward. Coming up, let's trade some options. Going to take a look at some of the big swings from today's session and then get ready for the closing bell levels with Kevin Green as the S&P sits right at 54.33, almost an unch day. Russell also seems to have put in the lows, so who knows? Maybe we can close on a positive note here.
Yes, Oliver, we can.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
My dad was a hard worker.
He sure
He had to
was.
do side jobs, installing
Windows. Here's the funniest way of saying Windows. Three black crows this morning on the 1 hour time frame with a spinning top. Now this is an interesting pattern right here. That's on the hour time frame. I think Jimmy would have took that trade. Fish that pullback. Do. Magnificent. It's good to see you back again. Sorry our reunion wasn't that good today. Jimmy was late.
We have generally been kind of pinned here, sort of around the same spot, KG, a couple almost days in a row. Does that make sense to you?
Yeah, it kind of does, actually, Oliver. It's nice to actually see the progression that we've seen on a day-by-day basis. When we started the week, we were really kind of focusing on that 5,400 level as an area of resistance. And on Wednesday, we were able to break that, and the new area of resistance became 5,450. But if you kind of look for the next 3 days, Wednesday, Thursday, and Friday, that's actually been moving to the downside. 5,350, moving down to 5,330. Even this morning, we were actually sitting around 5,320 this morning. Now, we are actually looking right now at the open interest chart. But here, let's focus on this chart and let's not move to the other one yet. The big focus for this week, though, Oliver, is that we have a Friday expiration today, right? So we're going to have a whole rebalancing effect, if you will, when it comes to the option levels for next week. So looking forward to that on Monday. But also note that we do have a monthly expiration next week, Friday, and then we will have a quarterly expiration that does also consist of these JP Morgan collar positions that can actually impact markets. But if you're kind of looking at it going to the next chart here on the volume basis, that step down is once again one of those areas that you want to kind of keep in mind. If you are a bull in this market, we're not really progressing. In fact, the walls are getting higher, lower and lower, making this compression. Now we're kind of hitting up into the upper end of that wall right now if you're looking at the S&P 500 going into the close, but it is kind of concerning that we continue to test that 5,400 level on an intraday basis. We're getting very close. We got very close today around 3 different times before trying to push higher. For next week, if you are a bull, you want to try to attack and hit that 5,450 level. I have that in gold. Very key in order to keep this momentum going. If we break down below this 5,400 level, that is an area of concern because we are still seeing some flows on the put side. Some dealers are hedging, some institutions are hedging, and you really don't want to see that build up in puts going into maybe a lackluster momentum after the FOMC meeting, if that makes sense.
So yeah, I like your description there, lackluster, right? But it does kind of fit with the levels we've been monitoring that have, I mean, like we call them guardrails, I think, at the beginning of this week, kind of the way I think about them. I don't want to get too carried away with that, right?
No, don't want to do that.
But that's kind of how they function this week. It really seems like we kind of kept, in the sense, in that kind of framing, we sort of kept cool heads in a way. I know a lot of people were looking and hoping for big, like, melt-up style. We got one spurt of that, and then nothing more, but we also didn't, like, give it all back up either. So, I mean, you could kind of argue that this was a tempered kind of climb for the index.
Yeah, a little bit. Now, if we're talking about market breadth, though, it kind of got weaker and weaker. So that's once again not really a good sign.
Did you do any trades today, Mannequin?
Because it is on the back of a couple of different names.
The video hit broke 130.
Apple earlier today, but Apple is a very good example of that melt-up scenario on the gamma side that it really actually provided a benefit for the broader market just because of the rapid moves where we had 5% moves to the upside, 3% moves to the upside here. And this is kind of that chart that's really signifying that. Now, where's that line in the sand for Apple? It's going to be the 212 area, 212.50-ish area, which is kind of where we're trading at right now. But if you kind of notice on the right-hand side, Oliver, we still have a lot of bulls that think that this thing can still run to the upside going into next week, and that is going to be a key thing to watch for. If we break through 220 will then open up the floodgates, if you will, for an advancement to the upside, a continued advancement to the upside. Now, you're going to need some good data, and you're going to need some positive stock flows and equity flows in order to do so. But even if we just take a slice of these companies out of the S&P 500, especially the bigger ones that have a fair amount of impact on the broader equity markets, we can kind of see that we are, bullishness is still being priced in for the bigger names. Is that going to drag up the rest of the index over the last 2 days? That just has not been the case. Let me also talk about going into the close here before we wrap it up.
Yeah.
There is a significant amount of buyers hitting the 5440 calls right now. So you kind of talk about these ramps, and I know you want to see a ramp, Oliver. I know you want to see one.
Or a crash. I'm getting claustrophobic in these ranges, KG.
Shut up. How dare you?
We're getting a lot of buying flows for today's expiration going into the close. Those zero DTE expiration traders out there hitting the 5440s. We're sitting at 5428 right now. So if those flows continue and we do see some positive price advancement, that's where you can kind of see these gaps to the upside. Look for 5420 as our area of support. There is a negative gamma level that is there. We tested it on an intraday basis several times over the last 2 hours, but the upside move or that ramp.
Oh, there it goes, halted right at time. A little early today.
We haven't been able to do that quite yet. Comparison, the index.
Let's call this a symmetrical flag.
Kind of seems like we're like at the sweet spot for Apple. Maybe that's why we just kind of fizzled out here today for Apple. Similarly, kind of the levels that keep us contained in the index is similar too. So unlikely to get anything like big. It seems like this afternoon. We'd have to start moving pretty quick, like now.
I mean, sometimes it happens the last 10 minutes of the session. I mean, if you actually looked at yesterday's session, we had a ramp up and then we faded like 8 points or 9 points with only 3 minutes left to go in the trading session. So we can see a lot of volatility, especially on days like today. One thing to note about Apple, though, you're not seeing the put side flows on Apple like you may see with some other stocks that ran maybe too far too fast, where speculators do believe that there's going to be a correction. As I kind of showed with that chart on the open interest, that's just not the case. In fact, we have more layering to the upside and more speculative flows to the upside for Apple. So maybe a cooling off period here today, but the market is positioning for Apple to continue this run to the upside going into next week.
Okay. All right. And it's been quite a move for sure. And S&Ps, from the index level, really generally held onto it. So all this kind of breadth discussion is fun from a analytical standpoint, but as far as the index level goes, as far as these major gamma levels go, just that hasn't really mattered so much. The kind of breakdown breadth-wise when we've got the big tech companies driving the action. Good stuff this week. KG, like the perspective. Looking forward to more. Appreciate it, sir. When we come back, let's talk some Bitcoin and then check in on one of the down movers in today's session. That's the cruise lines. No doubt from an analyst, just really blasted this group. So pretty incredible response to one report.
Doo-doo. I'll come back Monday energized. See, this week I've been a carpenter. So I own a janitorial business. And I got this job where I had to replace some ceiling tiles, and then there's a little spot on the carpet that kind of come unglued, and I had to glue that down. And I'm not much of a, I don't know, I usually had people get, if I needed something done, I'd pay somebody to do it, but so I had to cut a tile that had an extinguisher hanging down from it, and I didn't know how quite to take that extinguisher apart until I got up there and started playing around with it. So I replaced a few of them, and then I didn't know what kind of glue to get to glue carpet onto wood. And I went and bought some kind of glue you put on between, I guess, on the wood floor. And here we go again, asking me more questions. One, two, three, 4, 5, 6, 7. One, 2, 3, 4, 5, 6, 7, 8. 1, 2, 3, 4, 5, 6, 7, 8. Yeah, that's right. So now I was asked how many sinks are in this one building. So I had to glue this carpet down, and I didn't know what kind of glue to get. And I asked Lowe's, I said, what's the best glue to use? And I didn't know. So I just grabbed this one glue, and I've never glued carpet on wood before. So I worried about that all night, if I got that glue on there right. And I went in there this morning about 2, and it was pretty snug, so I felt good about that. And I had to replace a thing that goes on the bottom of a door to keep the bugs out from coming inside. And I've never put one of them on before. And I had to go out and buy a drill and a drill bit. Broke the drill bit. To screw in the screws. And then had that big storm last night. I'm sitting in here in the kitchen getting ready to cook some eggs and some spinach and some tomatoes, and I heard this roar. And I looked outside and I said, oh my God. I mean, everything was blowing everywhere like a tornado would, back and forth, in and around, and trees were kneeling over. And I went back into the kitchen, and I heard a big pop. Bang! And the electricity went out. And the only thing was that was working was the stove. I didn't have no lights, no nothing. So I lit a candle, and I figured I'd just go out and get my work done. And then I had to drive in all this rain, just buckets of rain coming down. I mean, you couldn't see 20 feet in front of you. So I'm hitting puddles, splashing water everywhere, can't see the road because we got a lot of potholes, so I was hitting potholes left and right. And then I go clean this building, and I come home, and electricity's still off. And then I pulled weeds yesterday. We're supposed to have this weed guy come out, and he didn't get it out there yet, so I pulled most of these weeds, and then they show up this morning. And I had like 4 hours sleep last night, 5 hours. I couldn't sleep. And then a storm woke me up. I couldn't go back to sleep. So it's one of them days. I think the moral of the story is when you're tired and you're not thinking straight, it's not a real good idea to be trading. Take the day off and just kind of. So I come back here, I turn on my computer, and the computer, only 2 monitors are on, and 2 other ones on the right didn't come on, and I'm wondering, oh shit, I hope I didn't blow this $2,000 computer up because of this storm. And so I get on there with the guy that built the computer, Digital Tigers, which is a good outfit. If you ever want to look them up, digitaltigers.com. They got some real nice computers. In fact, I'll show you. This is the one I got here. How do they take it off? Oh, there it is. So I got the Strat Pro with 4 monitors. And it has an upgrade. To a 32 gigabyte or something like that. 32 something. But they can run up to 1,800 to $3,000, 2,800 here for that price. Yeah, 1,900. I can hook out. I got 4 monitors hooked up to it. I'm getting ready to get me a laptop from them when I get ready to retire, so I can take this thing around. It's 2,100, but I want to be able to hook up 3 monitors to it. So when I go from hotel to hotel or resort to resort, I'll have my computer set up and my trading outfit ready. So 2 of my monitors on the right side was hooked up to a different plug-in compared to the one I had on the left. I guess the one on the left had a better surge thing on it. Usually when electricity goes out, I don't turn on the computer, and I'm missing 2 monitors. And I didn't know what was wrong. I didn't know if it was computer or if it was just the monitor. I've never heard of the monitors blowing up, but they did. And he said it's very unusual to have 2 monitors go out just like that after a surge. So now I just went out and bought 1. I'm dealing with 3 of them now. So I'll restructure all this. I might go out and get another monitor so I can go back to my 4, because I'm just not going to feel comfortable just having 3. So I'm sweating on my dirty floor trying to get this thing to work, and then I get a message saying we had so much rain last night that half of this roof leaks, and some of the sheetrock fell onto the ceiling tiles and busted down through the floor. And somebody was going in there to look at it to rent this building out. And, you know, they saw that. They said, hell no, I don't want to rent this thing out. And it's right next to the IRS building. It's a good spot. So that's the way my week's been. Been a pretty busy week, and then finished it off with 2 monitors being burnt out. And I don't know what kind of monitors yet. I'm not very computer savvy. It's like teaching a newborn how to walk. I have this set up and I don't want to touch it. I just want to leave it alone, you know, and not mess with any of the mechanics of it. And I wanted to get, he was trying to sell me a couple monitors for $800 to $1,400. Very high resolutions. These are right here. These are only 500, but they don't have that resolution that he was trying to sell me. This one, this size right here. We got 6 more minutes to go. So we'll get it back together this next coming Monday. So I took the time that I didn't have this morning, knowing that my electricity wasn't working. I shampooed a couple guys' booths. Kind of got that out of the way. And I'm very tired. I'm debating just to go to Longhorn and have me a salad and steak. Kind of treat myself for a rough week. But I made money this week. I did get into a bad call and lost $1,000 and had to build that back up. Well, I saved myself half of that, so I had one red day. Got stuck in a call, and it ended up going to about 15 cents, and I got out of it at 50. There's the moral of the story, though, is if you don't have a real good day, or you're just not feeling good, or you're tired, or everybody has an off day. Everybody. remember one of them pumpers that got busted. He had like, what was it, 90, almost a year without a loss, and I'm going, what? I mean, mine are minimal. I get about 5 a year. Five or six, 1 or 2 a month sometimes. I think I minimized that because I've realized, if I'm in the hole in a stock, I usually 95% of the time will bounce back up. So it's best just to hold on and hope you can go ahead and make it out. But sometimes it doesn't happen, and those losses can add up. I mean, because you want to add on to it, and then it just doesn't hold, and you're down $1,000 or something. And I don't go a lot of money. I don't throw a lot of money into a trade. $1,500 to $3,000 is probably, I get a little sweaty when it's around 5. But if it's 3,000, it's usually because I'm in trouble, and I got to try to bail myself out of it. But 95% of the time, if I sell it, I regret it. I'd rather hold on to it and see if I hit that 95%, or take that 5% loss. I mean, not 5% loss, but that chance of 5% of not be able to come out green. And that trade I did where I lost that money, I could have got out even with a little bit of profit, but I didn't do it. I held on to it, and bam, she went ahead and dipped on down. So there's always a chance where you can get out even and say, okay, I'm out even. I know it took me 4 or 5 hours, but I'm out even. Over. Oh, I missed it.
But that was the number one sell that we saw. Will it come back and kind of bite people and say, oh, we missed that rally? It's possible. But at the same time, the news that we saw on Monday from the Worldwide Developer Conference, yeah, it does kind of lay out the path for AI with Apple. But me personally, I didn't see anything that kind of stood out to rocket the shares the way they did. It's just that people are looking for the mention. I mean, look what we saw with Adobe today. Look what we saw with Avago or Broadcom, yesterday. I mean, when you're able to kind of lay out that AI path, you're being rewarded for it right now. And as an investor, you keep an eye out for that. That continues to be the theme. It doesn't mean it has to be overdone. Just be mindful of it.
Right. Good analysis, particularly some good breadth numbers there for us. Appreciate it, Joe. Always like the insight. Have a great weekend. Sure. Enjoy the cruise.
Thank you. Thank you, sir. I'll let you know how it goes.
Yeah, definitely. All right, Joe Mazzoli. Yeah, exactly. Hold on, minimal, at least.
Yes.
That's the lowest bar. so, all right, thanks, Joe. And trading-driven strategist Charles Schwab. All right, closing bell in a minute. See you on the other side.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions. I watched my mother go through being a single mom. At the end of the day, my mom
look at a 48-inch.
3 children, including myself.
Look at myself.
The client knew.
I don't want to look at you. You left the family. You sperm bank. So I'm going to be looking on the internet and see if I can't find me a good monitor for a 48-inch. Wow. I thought about getting one of them big long ones. I could put 5 or 6 different charts on it. So that's it. Moral of the story is make sure you got a little surge in it so you won't blow up your shit. And then when I got this monitor, I couldn't get it going. I'm going, no, man, I sat here for 15 minutes saying I can't get this thing lit. So I moved wires back there in the back and tried to get this one going. And all of a sudden I got it going. I said, oh, all the sweat. I probably lost about 2 pounds in sweat worrying about this thing. Computer. This is my life. You know, this is what brings the money in. And I got to have a good setup. I had 8 monitors back in 2010. I always thought it was important. You know, people would back then would laugh. I mean, man, that's, you know, that's freaky. I had like 2 desktops and two laptops, and each one of them had a monitor each on each one of them, which gave me 8. And I kind of stacked them up however I could get them to fit on a desk. Strange. I spent most of my time outdoors fishing, doing outdoor stuff, and then I got in music and played music for 15 years. And then I got into this for 20. So that's it. I got to go check out this place, and then I'm going to come back and get me a good night's sleep and reorganize my monitor. I think I need to get one more, but if it'd be nice to get one more monitor and stack it above these here 3, which a 48 incher would fit right up there. The thin, well, about 18 inches high and 48 inches wide. It'd have to be a curved one. Asus, there's one right here. And I could stick a bunch of little charts on that one right there, probably about good 5 or 6. I could be watching just on that top screen, top part of my monitors. I could be watching, because it's hard to go back. I mean, that's a good stretch to have to turn your neck like that to see all 4 monitors. You're back and forth like that. It'd be good just to have them right in front of me, where I can just kind of just tilt my head a little bit, not move it as much. Okay, well, you better have a great day. Sorry I wasn't with you today. Didn't get no beach trade out of the way.